Okay, perfect. So now we were last on the H4, right? So on the H4, as you can see, the market is not creating a downtrend, right? In terms of the market structure. So what am I talking about? I'm talking about this. So the market here, it's creating higher highs and then high low, high high, high low, high high, high low, high high, high low. What do we want? We want the market to do what? To create lower lows based on the factors of confluence that we got from the what? From the bigger time frame. So when the market does something like this, where it's creating higher highs and higher lows, but we are looking for to sell, what do we then do? What do we then do, guys? Let me know in the comment section. What do we then do? We want the market to create lower lows, to break the structure and create some lower lows, lower high, lower lows, lower high, lower lows. What do we then do? Let me know in the comment section, guys. Let's communicate. Let's have a conversation. What do we then do in this scenario? I want us to quickly go into Guild. Let's interact. Let's talk, guys. What do we then do? We are for wait for confirmation pattern. We wait. Zinhle mahlang. We are definitely right. We wait. We wait for what? We wait for the market to break the structure and begin to create lower lows, right? Now, since they're not creating the lower lows here, we're going to drop down into the H1. That will be the last time frame. Now, when we come to the H5, we want to see what is happening in terms of the structure, right? So on H1, in terms of the structure, the market was creating some higher highs. Here, they were creating some higher highs, beautiful highs. So this is the higher high, higher low, higher high, higher low, higher high, higher low, higher high. The market went and created a new lower low and then failed to hold the price because it was supposed to create a lower low, lower high, and then lower low, but they failed. They went and created a new higher high. After that new higher high, this is the higher low, and then this is the high. They created a new lower low. And then we want what? A lower high and then lower low. Now, I'll ask you a question. I want to see if you guys are taking things into consideration. How many time frames did we find them opposite to what we are looking for here? And which time frame to be specific? Which time frames to be specific with you? We started from the monthly. I said, how many time frames as we're analyzing, they were against the selling opportunity. They didn't give us the selling opportunity factors of confluence here. How many time frames? Zinhle Mahlangu says only one. Do you all agree it was only one time frame? Cruise FX 2. Bongade says 3. Everyone who says 1, who says 2, who says 3, tell me the time frames that we're against. Just say H4 and H what? H4 and H1. Daily or monthly or whatever, so that I may know what you're talking about. Zinhle Mahlangu says H4 alone only. Okay. It means the other ones of you were just guessing, right? It's only H4 which is against us. So we start from the H1. The market has already broken the structure. We've got a lower low, right? And then when we come to the H4, when we come to H4, the market have not yet broken the structure, right? The market has yet not what? Have not yet broken the structure. Now, I want to do this. Even the EMA is trading below. So we would want to see the EMA trading above the market. Let me quickly go into the H1. Oh, I didn't check the EMA. So the EMA, as you can see, on H1 is trading above. It just recently crossed. That's another factor of confluence. The market is broken, the structure as well. Now I'm going to quickly go into daily because we just looked at H4. On daily, the EMA is trading above, right? The market, it's from is trading back from the lower low, right? This is the lower low that I'm talking about. This is the lower low, and then lower low. They are coming back to create the lower high to retrace back into that area and continue to go down, right? The market structure, it says we are going down. We are on the bearish movement. And then on the weekly time frame, we are on the what? We are on the downtrend. The EMA is trading above, right? This is the lower low, and then this is the lower high, and then this is the lower low, and then lower high. Coming back to this area, we continue to go down. Are we correct? Monthly time frame. The monthly time frame, the EMA is trading above, right? I just realized something now. The EMA is trading above. We've got an area of neckline which is left unattended right there, which we want the market to come back and retrace into. Now, those of you who said so many things, you even made me to want to consider the structure here, right? I will also look at the structure. So this is the lower low, lower high, low, and then, okay, let me start again. This structure thing can confuse you sometimes. So this is the lower low, lower high, low, and then this is a high, and then this is a lower low. Why am I saying it's a lower low? The market traded below that previous high, lower low, lower low, lower high, low. They traded below it. So this is a lower low. And then we've got an M pattern as well. What do we anticipate? We're anticipating a push to the downside direction. So how many time frames were against our analysis? And I ask again, how many time frames were against our analysis? How many time frames were against what we're looking for? One, right? So let's say in a normal circumstances now, it's 5 people against 1 person. Can 1 person win? Can 1 person win against 5 people? So you see how you take a time frame that is against the market, but we're still going to make it, we're still going to wait a little bit on it, because how are we going to wait it? As much as we are waiting on the, I think it's the H1, because they've already broken the structure, right? And we will be waiting for them to come back into this particular area to retest, right? I'm anticipating a little bit of push back into this area before we have the next impulsive move to the downside direction. Guys, let me leave this DXY. We all can see we're anticipating a continuation to the downside direction back into that neckline before we have the next impulsive move. Let's look at gold. Let's look at gold. Let's look at gold. I know you guys are all excited to talk about gold. I don't know why so many people, this is most people's favorite currency, but at the same time, it shows people flames each and every day. I'm telling you, we're going to do the very same thing. We're going to do a top-down analysis. We're going to start from the monthly. I'm going to try to be fast as much as I can so that we can be able to manage to cover everything that needs to be covered, right? So this is gold, what we are looking at, right? So this is gold, what we are looking at. So previously, I did mention that gold, let's focus on the previous candlestick. Let's forget on the current candlestick, right? So this was where January closed. So meaning when January closed here, this is where how far January candlestick went, right there at the top. But this is where the body closed at the end of the day. When the body closed here, it simply means that the sellers already kicked in because the sellers took the price from this high up until back into this particular area. This is where they closed the price. How do we able to see that? We look at the whole entire rejection. I don't know what you guys call this at the top. You call it a rejection, or you call it a shadow. Some of you call it a shadow. Some of you call it a weak. Some of you call it a rejection. You can call it whatever, as long as it makes sense to you, it's okay. There is nothing wrong about it, right? Now, when the market closes like this, it simply tells you that the sellers have kicked in because they've definitely rejected the price from the top up until to this area. And if you measure the size of the candlestick, right, from where this candlestick opened here up until where it closed right here, and then where this wick rejected from up until where the wick closed at, you could definitely see that the buyers and the sellers, there was some sort of like equality in terms of momentum, but as long as the body closed as the green candlestick, it means the buyers still won the battle between for a bit against the sellers, because this candlestick body closed as a bullish candlestick, but the sellers have really kicked in at that particular moment when the candlestick closed. But now let's look at the current candlestick that the market opened with, right? So the February candlestick, when it opened, it went down all the way to this low, right? Completely almost to the opening of the January candlestick. And then the buyers, since we all know that the gold, the buyers are very much in control of it, right? But the buyers did what? Push the price back into this this candlestick becoming bullish. So this shadow below here, because remember, this is where this current candlestick opened, and this is where it closed on Friday. We are on the monthly time frame. It's still going to continue to form, right? So this whole entire movement here below, it means the candlestick was red. It was what? It was red. It was bearish. So the bulls or the sells were in control. As when you look at where the candlestick closed here, you'll definitely see, like I was saying, the sellers were already kicked in because they rejected the price all the way from the top, right? They rejected the price all the way from the top. So now, hence you can see immediately when the January candlestick closed. When I'm talking about the January candlestick, I'm talking about this one, guys. I know some of you are still confused. You don't know which candlestick I'm talking about. So when this January candlestick closed and we had this long rejection here at the top, it means the sellers already kicked in at the particular moment. And then that's why you see the next candlestick, which is the February candlestick. They started by doing what? They started by going all the way to the downside. But because the bulls are more dominant than the sellers, they managed to do what? They managed to push back the candlestick and change it to become bullish, as you can see, right? Now, let's focus on the current candlestick. The current candlestick, it is bullish. It has already rejected from the seller's price, and then we are anticipating a continuation to the upside direction by the look of how it looks right now. Let's quickly go into the weekly time frame. Now, in terms of the weekly time frame, the market previously, they closed with a whole rejection, right? Which is a bearish hammer pin bar. This candlestick, it's a bearish hammer pin bar. When you've got a bearish hammer pin bar, the market, it symbolizes that we might have a change of character. As you can see, immediately after this bearish hammer pin bar was formed right here, was closed, I meant to say. After it was closed right here, the market did what? Continue to go down to respect what? The formation of the bearish hammer pin bar that it was formed here. Now, after that, you see the market start doing what? Start rejecting, going back to the top, right? And then as you can see, if you look at previously here, you'll realize something. You'll realize that the market has been using the support and the resistance type of movement. So as much as they rejected at this particular area, but you can see that they've been using what? Breakout, retrace, and then breakout, retrace. As much as even if they rejected, but the market, the price did come back into this particular area before we have the next impulsive move, right? Now, I then said last week, if you remember very well, if you attended my live session on TikTok in the morning, I think it was on Thursday, I said when the weekly time frame closes, it will play a very huge, significant role in terms of us knowing what's going to happen this coming week. Because a weekly time frame, trust me, it carries so much weight to tell you what's going to happen in the whole entire week. But if you don't pay attention to that, you will definitely not going to know. You see the weekly time frame and the monthly time frame, they can tell you what's going to happen the whole month if you know how to read candlestick formation. Because candlestick formation, they are the language in which the market communicate with you to tell you that we are about to reverse here, or we're about to consolidate, or the market have lost the momentum, or there's more buying pressure in terms of when the market is going up, or there's less buying pressure, or there's more selling pressure. In terms of just candlestick formation, if you know how to read the candlestick formation that deep, right? Now, this is the weekly time frame, what we are looking at. You see, the candlestick closed as a bullish candlestick with a very long rejection. Same applies with just what happened on the previous last week. It told us that it's going to continue to go down before it can even. This candlestick, I'm talking about this red candlestick, the one that went all the way up to this area and it got rejected. When it was closed, the market did what? If you know what is the meaning of the, if you know what is the meaning of the bearish pin bar with a long rejection, what you call, with a long shadow like this one, you will definitely know what the market was trying to tell you in terms of what's going to happen next after this candlestick was closed. And we've seen after this candlestick was closed, the market continued to go down. And then now they are done retesting at this particular area. They are rejecting. And then last week, they closed with the very same bearish pin bar. The very same. And one thing I like about the current candlestick, it even body closed bullish. So a bullish candlestick, or a bullish candlestick that carries a formation that the market is about to change the structure, it must also align the body of the candlestick. It must body close bullish. The candlestick, it must not be a bullish pin bar, but it body close bearish. When I'm talking about body closing, I'm talking about this. So this is the real body of the candlestick from here up until here. I'm talking about this. So when the market body closes bullish, it simply gives you more probability in terms of you looking at whatever setup that you're looking for. So if you're looking for a buying opportunity, that simply means that it has given you more probability to look for your buying opportunity. So since we close with a bullish pin bar, that's another factor of confidence to say gold will continue to go up. It will buy because this is a change of character candlestick formation going to the upside direction. I'm done with the weekly. I'm going to quickly go into the daily. The reason why I'm a bit fast, guys, I'm trying to make sure that when this time finishes, this 30 minutes, we are all done with what we were doing, right? Now, I had something here on the daily time frame last week. So on the daily time frame, if you look at here, we had a support area here. We had what? We had a support area. We had a support area, which the market rejected from. It turned back from. How do I see that this was a support area or this is an area of interest? It's because we have multiple touches, right? We have the first touch, we have the first touch, we have the second touch, we have the third touch, fourth touch, fifth touch, sixth touch, and then this was the seventh touch. And I'll tell you one thing. When the market approaches an area of interest or a support and resistance area, and then it starts rejecting at that particular zone, that's also, it's a factor of confluence alone. When the market gives you a rejection, a week at that particular area, it shows you that there's buyers or there's sellers momentum at that particular area. Now, let's look at this. The market has been using support and resistance as they were moving up. I told you even last week, I said you need to pay attention to small little details. When you're looking at here, you will realize that the market did what? They created a new high, higher high, higher low, and then they created the higher high. They had this small instant retracement, and then they went to the top. Now, if you look at here, this is the next higher high. This is no longer a higher high. This is the next higher high. This is not the next, the last previous higher high. Hence, that's why when you look at the market, I'm saying this is the higher high, this is the higher low, and then this is the higher high. Then the market had an instant retracement, and then they went all the to the top. This is the higher high. Then they pulled back into that previous higher high. And then they doing what? They're continuing to go up. You understand what I mean? Now, if you look at the current candlestick on the daily time frame, we turned back from the support area as I was anticipating, right? We turned back from what? We turned back from this support area. This was the support area where we turned back from. The market rejected from this particular area. Now, the candlestick formation that we currently have, that the market closed with last week, what is this pattern? What is this pattern? What is these two candlesticks? What is this? What is this candlestick, good people? Trees are bottom, bearish engulfing. A bearish engulfing, the last candlestick must gap up above the previous one. So it's not a bearish engulfing. So the last blue candlestick or green candlestick, it was supposed to go a little bit up from the red candlestick. So this must be a tweezer bottom. One will say, why, Lester, are you saying this is a tweezer bottom or tweezer top, right? If the highs are not equal, since the lows are equal, but the highs are not equal. Let me tell you something about the market, what I've learned in the past 8 years trading. The market will always give you something to make you think that whatever that you've learned from the book, it's not correct. Anything that is close to what you've learned, it's correct. I don't know if you guys hear what I said. When we learn about the doji candlestick, we are told that a doji candlestick does not even have a real body. Here is a doji candlestick that I'm talking about. This one, the middle candlestick here. When we learn about candlestick, we are told that the open and the close, it must be on the same price. It must be the same. But if you look at here, don't you see a little bit of a body here? I'm asking a question. When you're looking at this, don't you, when you're looking at the doji candlestick, when you're looking at this doji candlestick, don't you see a little bit of body? I'm talking about this one, where I've pointed here. Don't you see a little bit of body here? So, but when we are taught on the book or when you learn, they say the open and the close, it must be on the same price. So that alone, you see that they are trying to confuse you. Now, would you say this is not a doji candlestick? This one, the candlestick in the middle, this one. Would you say this is not a doji candlestick? It is a doji candlestick. Same applies with this one. If this is not tweezer bottom, then you tell me which candlesticks they go close to, that you can say, no, but as much as there's that one thing that is missing, but maybe it's a bullish pit bar, or it's a, these are tweezer bottom. I can tell you for a fact, these are tweezer top, these are tweezer bottom. You understand what I mean? So do not always look for perfection when you are analyzing the market. Whatever that you're learning, you're gonna get it twisted a little bit. It's just the same as when you are taught at school. We were taught 1 plus 1 is 2. But when you get to exam, they're going to tell you that 15 plus 25. Now we are no longer looking at 1 plus 1. We were taught that 5 plus 5 it's 10. But when you get to exam, they're going to tell you 25 plus 17 minus 18. What is that? Now you have to use your medulla oblongata to think, oh, okay, now I have to minus that, I have to plus that. Because why? They have taught you the formula. So same applies with trading. Since they have taught you the formula to trade that we've got tweezer top, you just have to put it close to it when you see the tweezer top. You understand what I mean? Now, here's another factor of confluence that I just recently saw. So since we are here, right? So the market did what? So let me tell you something. This market has been broken the structure. If you didn't know, I'm going to tell you this. This market has been broken the structure. This is the higher high. This is the higher low. This is the higher high. This is the higher low. This is the higher high. And then this is the higher low. This is the high. This is the low. They haven't created a new, they haven't created, I meant to say, sorry guys. I think I confused myself as well, sorry. So this is the higher high, higher low, higher high, higher low, and then higher high, and then this is the higher low, and then this is high, because they didn't go and trade above that higher high, right? This is the higher high, higher low, high, and then this is a low. If the market would have went and traded below this higher low, the structure would have been broken. Here, higher low. So the market failed to go and trade below this higher low. So this is a higher high. This is the higher low, and then this is high, and then this is low, right? What are we anticipating? The market failed to trade below this higher low. They even created what? They even created a high and a low. So what do we want? As you can see, they are gapping to the upside direction. We want them to continue to go to the upside direction. That's all we are looking for. So we've got the factors of confluence on the daily time frame that we are going to continue to go to the upside direction. Let's quickly go into H4 because that's where the more details are at, right? No, I think the more details they are on H1. I need to quickly move from here. Okay, but we're not gonna pass without not looking at it, right? Now, we've got the low, which is this one, and then we've got a high, right? Now, we don't have much details when it comes to the H4. Sometimes it happens that some time frames can give you factors of confluence and another time frame may not give you, but we don't have much details when it comes to this one. But I'll tell you one thing that I'm noticing, right? So this is the higher high, and then this is the lower low based on me, right? And then the market failed to go and trade below this area. And then they still continuing to do what? To continue to go to the upside direction. So if you put your trend line here, you already see that we already have our first touch. We have the first touch. We have the first touch right here. We have the second touch. And the market is doing what? It's continuously failing to create lower low. But it's creating what? These are higher highs, these ones, in terms of the market structure, right? That alone, it's enough for you to see that the market, it's not going down. Because if it was going down, the market was supposed to be doing what? It was supposed to be giving us lower lows, something like this. But in order for you to see that the market is not bearish, since from this low here, they fail to trade below it. This is the next low. It means the buyers are dominant. You understand what I mean? So this one, I'm going to leave it like this. I'm not going to complicate it because there isn't much information to look at here. So when the market does something, don't force and try to find things that they don't exist. Go and focus on things that it can make sense for you, right? Now we're going to go to H1, which it makes more sense for me, the H1. Now in H1, we had this low, right? I'm going to start from this side. The market was cruising very nicely, creating some lower lows, lower high, lower lows, lower high, lower lows, lower high, lower lows, and then lower high, and then low. They then begin to stop trading below the lower low. They created their new lower low, their low. Then they created the first higher high, higher low, higher high, higher low, and then higher high, right? And then they came back again, they break the structure again, right? When they were breaking the structure, I think you guys remember, I did mention, and when we caught this sell, if you've been following me, I did mention that, guys, the structure is broken. As they broke here, when they created this lower low, lower high, lower low, lower high, equal low, and then lower high, and then, okay, this is lower low, lower high, and then low, and then high. So this is a high, sorry. So this is lower low, lower high, lower low, lower high, low, which is equal lows. And then this is a high and then lower low, right? You remember this whole entire structure, right? And then look at this. The market then created a downtrend here, right? They created what? They created a small downtrend right here. Now, when they created this downtrend, first of all, this is an area of interest, right? Because why? We have the first touch, we have the second touch, and then we have the third touch, we have the fourth touch. It's an area of interest. Then look at this. When the market breaks, they come back and retrace, and then they continue to go up, right? That is the first factor of confluence. They've broken out of this downtrend. Now, out of this downtrend, we have what? We have an inverse head and shoulder. I spoke about this last week. I sent it on the other group. I said, do you guys think this is an inverse head and shoulder? So this is the head. This is the head, right? And then this is the left shoulder. And then this is the right shoulder, right? Allow me to remove these trend lines, guys, right? And then this is the neckline. What does an inverse head and shoulder symbolizes in the market? So this is the left shoulder, this is the head, this is the right shoulder, and then the market continues to go up, right? What does the neckline symbolizes in the market? It symbolizes reversal, right? Now, I want you to pay attention to this as well. So the very same particular area, which is the neckline, right? It is an area of interest. Someone says I must put a line graph. Someone said I must put a line graph. It will still correspond, trust me. I know what I'm talking about. Here is it. Someone say I must put a line graph. He wants to see something. It will still correspond. It will still correspond. It will definitely still correspond. So this is the area of interest, right? This is the head. These are the shoulders. I know how to spot a valid head and shoulder and an invalid one. Don't worry. I just put it the line so that you can be satisfied as well. Right? So here is it. And now, when I look at this, you just by putting the lines, you just showed me something. This is the diagonal head and shoulder. This is a diagonal head and shoulder. It's not a horizontal one. But it's still okay even if you can put the lines like that. So this is a diagonal head and shoulder. This is the left shoulder. This is the head. This is the right shoulder. I would really love to see them coming back to retrace into this particular area before we have the next impulsive move. Going to the upside direction, right? Now, I'm going to remove everything, including the line graph. We're going to go back into the candlestick, right? But I would love to just put it like this as a zone. So at the same time, at this particular area, which is the neckline, it's an area of interest. We had multiple touches. This is the first touch. And then this is the second touch, right? This is the third touch right here, right? This is the fourth touch. This is the fifth touch. Then this is the sixth touch, right? This is the seventh touch right here at the end, right? We might even have another touch previously. Let me do like this so that we can find all these areas. So we have another touch previously, which is this one. And then the market broke, came back and touched. So this, it's an area of interest, this particular area, where the market broke, where the market created the neckline at. It's an area of interest. So we've got an inverse head and shoulder right here. What do I want? I would want the market to come back, retrace back into this area of interest before we have the next impulsive move to the downside, to the upside direction. That's all I've got on gold. I'm gonna drop down a little bit into 30 minutes. I wanna say something, right? So on 30 minutes, the structure is already going to the upside direction. We also have a very beautiful downtrend that the market broke out from, as I anticipated for the same thing on H1. We have this right here. Beautiful one. We have this head and shoulder right there. Left shoulder, head, right shoulder, broke, retest, continue to go up. But look at this. After they broke out from this neckline, they started consolidating. This, I call it an accumulation. They started accumulating. We might see the market coming down before we have the next impulsive move. Just just keep an eye on it. If they break above this small zone of consolidating here, it means you're just going to continue to go up. So gold, we are very much bullish, guys. We are very much bullish. Even the EMA, I'm definitely sure that it says the same thing. I can't even find it. I don't know what happened. Where do I find my EMA? I don't even know where to find it, guys. Uh, okay, okay. So there it is. Even the EMA is trading below, giving us another factor of confidence, right? That the market will continue to go down, serving as a support and resistance. Guys, let's call it a night. I am tired now. Tomorrow morning, I'll be live 5 o'clock in the morning. I'm going to be looking at other pairs. Today, we just looked at gold. Gold, we're going to continue to go up as you've seen. Thank you so much for tuning in. Let me love and leave you. Have a beautiful evening. Bye.